Hey everyone, Daniel here and welcome back to another video. I hope all of you are having a great day out there. As always, here today, I want to talk to you all about 5 stocks that in my opinion have a lot of potential over the next few years here to really outperform the market in a major way. And all of these stocks have a few things in common, and that is that they're all growing revenues significantly year over year and month over month. Alongside that, they're trading at relatively cheap valuations, and they're also all disrupting very disruptible industries. So in this video, I'm going to talk to you all about exactly what these 5 stocks are, my opinions on them, and some updates as to what's happening with each of them in the short term. I'm going to have chapters listed below so you can kind of scroll through the timeline that YouTube kind of provides and potentially skip to the stocks they want to look at. So if you enjoyed this video and find some value in it, please consider subscribing. And without further ado, let's get into it. Now, the first stock on the list here is Bigg Digital Assets, and this is a company competing in the cryptocurrency space in a very innovative way. Now, Bigg Digital, they trade on the over-the-counter exchange within the United States under ticker symbol BIGG.CN, and in the Canadian Securities Exchange, for any Canadians out there, they trade under ticker symbol BIGG.CN. Now, the thing about Bigg Digital Assets, they have 2 main subsidiaries that bring most of the revenue to the company. First and foremost, Blockchain Intelligence Group, and then Netcoins. So what we're going to do, we're going to focus in on each of these different subsidiaries separately and give you an in-depth look into exactly what each of them does. So first and foremost, Blockchain Intelligence Group. Now, this side of Bigg Digital's business focuses in on the safety and security of digital assets by being able to track down fraudulent activity within the blockchain, be able to track where Bitcoin and Ethereum travels throughout the blockchain, different wallets, and potentially being able to recover customer accounts or funds. And this is very similar to what we saw with the Colonial Pipeline incident, where we actually were able to recover, or the United States government was actually able to recover a large amount of the funds given to those hackers. And what Bigg Digital does and what Clue, that's the actual product here, does is very similar to that. Now, talking about Blockchain Intelligence Group, they recently signed a contract worth upwards of $160,000, I believe, $160,000 there in and about. So when I look at Bigg Digital, when I look at it as a stock, I see 2 main things. Obviously, I see Netcoins, and then I see Bigg Digital. Netcoins is the current cash flow machine. It generates the most amount of revenue and money for the business. But the security side of Bigg Digital's business, I think it has a lot of potential longer term to grow into something much bigger. So although this $166,000 contract may not be a needle mover when it comes to Bigg Digital stock, in my opinion, it does show that people and companies and corporations are willing to pay significant amounts of money for contracts within the cryptocurrency system to really track down on fraudulent activity. And it shows the value that Bigg Digital's, or the Clue product has within the system as a whole. So again, although it might not be a needle mover here, it shows that it has potential in longer term. I treat it as more of a cherry on top when it comes to my projections with Bigg Digital. Now, the next side of their business is Netcoins. Now, this is a cryptocurrency brokerage / exchange that allows you to trade, I believe it's 7 to 10 digital assets solely within Canada at this moment in time, but expanding into the United States and Europe within the coming months here is going to be a big catalyst for growth on the platform. Obviously, it's very modern, and in my opinion, it does have a lot of potential. But one of the things with the Netcoins platform, it is commission free, but they do charge roughly a 1% spread that is baked into the price whenever you buy or sell a digital asset on their platform. So they have a great platform going on there. In my opinion, it will grow into something much bigger longer term. But one of the bigger catalysts here in the near term is this regulatory license that they're about to get from Canada. And this will make them the first fully licensed cryptocurrency exchange within the Canadian market, which will be big. And when I look at Bigg Digital, I've heard of this a lot of times in the past. This regulatory license will be big for the business. And, I've had a lot of questions asked, why is this going to be big? What is this regulatory license? And, what's the process of getting it? What are the benefits? So, to explain this a little bit better, I have a clip, just a couple minutes long, from Mark Binns, the CEO of Bigg Digital, to explain how they got this regulatory license, why they expect it to come to Bigg within the end of June. I believe that is the timeline at this moment in time, and the positive impact that it will have on the business. So let's roll this clip.
By that means there's no registrations with securities commissions, and it's been that way since inception. And we saw that in the early days and said there's a huge opportunity here to take a leadership position and become regulated, or try to become regulated, because the market deserves a safe place where investors and both retail and institutional know they can put their money, and it's not going to end up in a scam like the Quadriga situation that we all probably know about, where $250 million were lost through a guy that may or may not have died in India, et cetera. But we saw that this is a need in the industry. So 2 years ago, in fact, it was October of 2018, I approached the CSA, the Canadian Securities Administrators, through the BC Securities Commission and said, we have the only exchange in the country that's owned by a public company. We're already audited. We're already transparent. We're already secure. We'd like to get a regulatory license just to get basically your stamp of approval. And they said, great, we'd like to do that too, but we don't have a license built for crypto. And we said, that's okay. We can work with you on a process. And we actually said we can also educate you on how Netcoins operates, how we do things like customer onboarding, how we do fair trade execution, anti-money laundering, custody, insurance, et cetera. And then we proceeded to hire 2 national law firms. Miller Thompson was one of the best crypto lawyers in the country, a guy named Derek Fall, and then BLG with great securities lawyers. And we started having meetings with the CSA, starting with the BC Securities Commission, then moving across the country with the OSC, et cetera, showing them the platform, being part of their sandbox, and working together on both education, but then understanding what a license would look like in this space. Fast forward to 2 years later, September 29th, 2020, we submit a 488-page document to the BC Securities Commission and the CSA to get a restricted dealer license. So that was in the fall. And, we believe we're very close to the final stages of receiving that license. It's been in review. We're, of course, answering questions. And we're hopeful that we're going to receive approval either in March, but we're getting close to the end of March here, or April, to move forward as a licensed participant, as we had, started the process 2 years earlier. This is significant for some reasons, multiple reasons. We're going to get, a lot of publicity. There's going to be free marketing. We're going to become a household name. Netcoins is already well known in Canada, but I think we're going to see this in the newspaper, on the national news. Everybody's waiting to see regulation come to the space. And then there's going to be a competitive reduction. I mentioned, there's 15 to 20 participants in Canada. There's also global firms operating here from outside of Canada. And the regulators will begin a process of essentially enforcement, right? They want the market to be controlled, and they want it to just have regulated participants. So we believe there'll end up being a lot less participants in the market come 6-12 months from now as this unfolds. We also believe we're in an excellent position to get a ton of the corporate business, treasury buys, fund business that's happening in Canada once we're regulated, because we'll be one of the first regulated platforms in the country, if not first. All of this should translate to a significant rise in volume, significant rise in revenue. Our revenue model is very simple. We basically make 1% on every transaction. So as volumes rise, directly proportionally, so does revenue rise.
So obviously this is a big catalyst for the business, something to watch, and doesn't really have any negatives associated with it, just good brand recognition and good stabilization within the Canadian market as a whole. So that is Bigg Digital. I have in and around 5% of my stock market portfolio within Bigg Digital stock. I think it has a lot of potential longer term, and I'm holding it just as a long hold. Now the second stock on the list here is Guru Organic Energy Corp, and this is a company competing in the energy drink space, but with a very interesting twist, which we'll take a look at in a moment here. It trades under ticker symbol GURU.TO on the Canadian exchange and ticker symbol GUROF on the OTC exchange within the United States. Now, the thing about Guru, they're really switching up the game when it comes to energy drinks by using only organic ingredients, low levels of sugar within their actual drink. Now, one of the best things that you can do whenever investing in a company or a stock is to actually try out their product for yourself. And when I tried Guru, I was really impressed with the quality of their product, the low levels of sugar within it, and also the fact that it is all organic. I think that does differentiate the product, which is why it has been selling so well. Now, a Guru over the past couple of decades here has been primarily based within Quebec, and the thing is that really limited their growth. But over the past couple of years here, they switched up their CEO and their management team, and they're really focusing in on growth now throughout the remainder of the Canadian market and throughout the United States as well. And I think that will be one of the big drivers of growth for Guru over the coming years here, at least in my opinion, as they continue to expand in these new territories. Now, the thing about Guru is that they just went ahead and reported their fiscal year 2021 second quarter financial results just a couple of days ago here, and their fiscal year is a little bit skewed. When we're talking about these results, it factors in the months of February, March, and April, so it is a little bit skewed here, but just so you know, it's factoring in February, March, and April data. Now, record revenue, $7.1 million, up 74% year over year. Gross margins at 63% compared to 60% in the previous quarter. And this is absolutely fascinating, guys. I mean, Monster Beverages, obviously one of the biggest companies within the energy drink space, has gross margins in and around the range of around 60%. So what we're seeing from Guru is not just top line revenue growth, but also growth in gross margins, which makes me very confident that longer term, Guru could potentially have net income margins very, very similar to what Monster Energy has. And if that is the case, this stock is trading ridiculously cheap in comparison to a majority of high growth, energy drink companies out there. And the fact that they're still not in the United States and the rest of Canada really does open up a lot of growth opportunities for this company. They have a strong financial position, very minimal debt. They continue to expand the locations that they're available in, and they're also beginning their launch within the United States a little more heavily. Again, that is going to be one of the major growth catalysts for this company, not just Canada, but the rest of the United States. But one of the highlights from this earnings report is the partnership with Guru and PepsiCo Beverages Canada, announcing a national distribution agreement for Canada. And what we're going to do here is take a look at this partnership here with PepsiCo and Guru, as it is very, very big and fundamentally changing for the business in a massive, massive way. Now, here are some of the main points here. First and foremost, PepsiCo Beverages Canada to become exclusive national distributor of Guru plant-based energy drinks effective October 4th, 2021. So again, a few months away from today. Long-term agreement to significantly accelerate Guru's Canadian growth plans. Guru to benefit from PepsiCo's expansive direct-to-store distribution network across Canada. Now, from my understanding, this partnership here with Pepsi and Guru is set to last a decade, so 10 years. And on top of that, they do plan on re-signing. Again, there's no reason for them not to re-sign their contract as long as Guru is making their payments and as long as Guru is still popular. But this is very, very big. And they also pointed out on their actual investor deck that currently they have around 15,000 points of distribution for the Guru product. So that's actual stores. And PepsiCo is going to be able to bump that up to upwards of 35,000 within just the next year here, which is very, very big. I mean, Pepsi, that's obviously a massive company, one of the biggest companies in the world. Guru partnering with them just for the Canadian side of their business, obviously that is the majority of their business at this moment in time, will be able to accelerate their revenue significantly over the coming months and over the coming years. I mean, guys, when we talk about 2022 here, I think that's going to be a massive year for Guru and massive growth year for the company when it comes to revenues and profits and other things along those lines. Just an incredible partnership here with PepsiCo and Guru. But the real potential catalyst that comes from all of this isn't just the revenue growth that may come within Canada over the coming years, but the United States opportunity. As we know, Guru is expected to expand into the United States over the coming years. And if this partnership here with Guru and Pepsi goes very well, it would not surprise me in the slightest if Pepsi says, all right, Guru, your products are selling well here, we're making money, you're making money, let's go to the United States. We have a massive network of different points of distribution that will drive massive growth for the company, which is very exciting from an investor's point of view. So what am I doing with Guru stock? Am I buying or am I selling? Well, currently I'm kicking myself for not buying Guru back when I made my original analysis video at around $15 per share. But to be completely honest with you all here today, at $17.50, Guru, in my opinion, is still a steal in comparison to a lot of other high-growth, energy drink companies out there. I like the vision at Guru and the fact that they're still trading, from my understanding, at a price-to-sales ratio of under 20, not even factoring in the massive growth we're going to see in the coming years here. In my opinion, makes this a very attractive long-term opportunity for long-term investors. Again, I can't tell you to buy or sell a stock. This is all financial opinion, not financial advice, so take it for what you will. So that's my opinion on Guru stock. I could very well add, I'll keep you guys updated on that. But the next stock on the list here is AcuityAds, and this is a very interesting stock. Again, I reviewed this, I believe it's a couple months ago at this point, but this is a company involved in the advertising space, the digital advertising space, and they recently uplisted to the NASDAQ and trade under ticker symbol ATY on the NASDAQ and ticker symbol AT.TO on the Toronto Stock Exchange, from my understanding. Now, Acuity isn't the easiest business to understand, as I think the first thought that a lot of people have is, why wouldn't people just go to Facebook or Google and run ads on there? And the thing about Acuity is that they're very good at increasing efficiency of each dollar spent. So what they do, they go out to these wholesale advertisement auctions. That's actually a thing where they auction off advertising space. They buy those advertising slots at wholesale prices, and then they use their algorithms and their customers to determine exactly where each ad should be placed and increase efficiency per dollar, which allows them to mark up their prices of each ad spent and obviously make money off of that. Currently, their gross profit margins are sitting in and around 50%, which in my opinion will increase longer term, mainly because of Illumin. Now, over the past little while, Acuity's overall goal was to pair with a lot of larger institutions and a lot of larger stores to focus on their advertising campaigns one-on-one. But what they're doing now is really focusing in on Illumin, which is their new product that really focuses in on democratizing the digital advertisement industry. And this video kind of shows it. We got to skip a little bit further here, but you can see the different advertising campaigns and the way that small and medium-sized business owners can use Illumin to set up advertising campaigns for their own businesses. Now, the product is obviously very good. Their revenues are increasing year over year and have been increasing over the past decade plus, and they do have a lot of very interesting partnerships with Purple and Home Depot and other larger stores, which does show the power of their platform and the fact that it isn't just a cool layout. It actually does increase the efficiency of each dollar spent in the digital advertising industry, which is why people use it. Now, Acuity, again, this makes up in and around 5% of my stock market portfolio. I really do like it longer term, and I think it has a lot of potential to become something similar to the Trade Desk, which is pretty much their main competitor. Again, I think Acuity longer term and over the next couple of years here, the main driver of growth will be Illumin, as it will allow them to expand into the small and medium-sized business world. Now, the fourth stock on the list here, second last here, is the Tattooed Chef, trading under ticker symbol TTCF, now just in and around $20 per share. Now, the Tattooed Chef, I've been talking about this guy for a while now, and the stock has been pretty much all over the place, right next to $30 per share, all the way down to $10, $15 per share just a couple of months ago. Now, the Tattooed Chef, they're focusing in on revolutionizing the way people eat by creating frozen, plant-based, and healthy food. Now, the Tattooed Chef, they're expanding into a lot of different stores, Costco, Walmart, Target, and you can get them in most locations across the United States. Again, international expansion into Canada and Europe will come over the coming months and over the coming years, but currently they're focused in on the United States opportunity. Revenue growth is substantial at this company, 50% plus year over year, and that will continue over the next 5 years, at least in my opinion. They have a great balance sheet, great management team, and a great vision at that. Now, the only problem that I can find with the Tattooed Chef, and this is actually pretty recent, is pertaining to a situation with the CEO giving some shares and the CFO leaving. Now, I made a video on this just a couple of days ago, giving you my insight into the situation. Essentially what happened, the CEO of the Tattooed Chef gifted around 800,000 shares to the people who essentially facilitated the SPAC process. The Tattooed Chef is a newly public company. They went public through a SPAC, a Special Purpose Acquisition Corp. Now, at its core, Sam Galletti, the Tattooed Chef CEO, went ahead and gifted in and around 800,000 shares to the people that facilitated the SPAC process in the process of them becoming a public company. The Tattooed Chef went public back in late 2020, and Sam Galletti, the CEO, obviously very grateful for this whole opportunity, which we go more in depth into in that previous video that I made just a couple of days ago. Very grateful for this valuation that this business now has, obviously at $1.7 billion. He went ahead, gifted some shares, and what happened is that the CFO of the company, the Chief Financial Officer, Chuck Cargill, actually went ahead and left the company shortly after Sam Galletti went ahead and gifted these shares. And one of the concerns that certain individuals have is that this gift from Sam Galletti to these individuals at the Special Purpose Acquisition Corp could potentially be considered a bribe, which the CFO saw, and valuing his reputation, he left the company. Now the thing is, it isn't uncommon for individuals and CEOs to actually gift shares to the individuals who took care of the SPAC process. This is actually something very common in the industry. And the CFO, the Chief Financial Officer, Chuck Cargill, leaving the company, this was predetermined a while back. He was brought in, again, to facilitate the whole SPAC process and left shortly after once the company stabilized. Now, the thing is, and some people did mention this in the comment section, is he left the company, but he also left $5 million worth of Tattooed Chef options on the table. And some people do look at this from the perspective, oh, okay, Chuck, $5 million of options on the table. He went ahead, saw some fraudulency, and left that money on the table, again, valuing his reputation. But in my opinion, this is something that not a lot of people actually looked at. Those options expire over the next 5 years. So Chuck Cargill would need to stay at the Tattooed Chef over the next 5 years to receive his full compensation, despite only coming to the company for the span of less than a year. So from my understanding, this is more of a question of the Tattooed Chef being a newly public company and not fully understanding stock-based compensation, maybe making an error on that part, than it is Chuck Cargill leaving $5 million worth of stock on the table due to shady activity. Again, it's really important to note that we don't have enough information or clarity on this topic to really make an educated financial decision. Again, I can't tell you to buy or sell a stock, but currently I'm not selling any of my Tattooed Chef calls or shares. I'm still bullish on the company. And in my opinion, this is really just something that comes with a majority of companies who are new to the public markets, like the Tattooed Chef in this situation. Nothing to worry about at this moment in time. And I'll keep you guys updated, so make sure to subscribe to see more updates on the Tattooed Chef. Now, the last stock on the list here is Shift Technologies, trading under ticker symbol SFT. Now, this is a stock that I also own, trading right around $8.25 per share, and it's really been rubber banding around this area over the past half year here, despite continued improvements in fundamentals. Now, Shift Technologies, at its core, it's a company focusing in on e-commerce used car buying and selling. So what they go ahead and do, if you have a used car that you want to sell, for example, you go to shift.com, you input your information here, whatever your make is, your car, you take some pictures, they automatically give you a quote, and if you're happy with that, you click one button and your car is sold. What they do after that, they fully refurbish it, take some nice pictures, and they flip it for a profit. Now, their revenues have been absolutely exploding over the past couple of years here, especially in 2020 and 2021. We just saw a phenomenal earnings report from Shift Technologies back in early May. Again, there isn't too much to talk about Shift here. Again, it continues to execute on a high level. Revenues continue to grow. Gross profit per unit continues to grow. And they continue to grow as a brand and as a business. Now, I mean, the best way to look at this is just visualizing this. I mean, if you take a look at this revenue growth, 32 million, 60 million, 73 million, over 100 million, if this was year over year growth, that would be impressive for a lot of companies. And the thing about Shift, this is quarter over quarter growth, and this isn't expected to slow down anytime soon. Now, the one thing that, in my opinion, is really keeping down the stock price is the lack of profitability. Again, Shift will more likely to not get profitable by 2023 to 2024. Again, this is one that I think is a perfect example of a stock that stock price remains stagnant despite continued massive improvements in fundamentals. Shift Technologies, I like this one. And again, I do like it from the standpoint of being a very undervalued play compared to companies like Vroom or Carvana, which are trading at richer multiples, despite Shift actually having more significant growth than those corporations. But Shift Technologies, I like this one. I like the revenue growth. Anyways, I have around 7% of my stock market portfolio in Shift Technologies stock. Let me know what you think about it in the comment section down below. Anyways, guys, thank you so much for watching this video. If you found any value in it whatsoever, please consider subscribing, and I'll see you all in the next one. Bye.